How's it going? Welcome back. It's Jonathan. Okay, so in this video, I'm going to be introducing you to financial astrology, at least to a very minute level. Okay, so in the McWhirter theory of stock market forecasting, we go through her 18-year cycle. We go through how to forecast the New York Stock Exchange, which would be the Dow Jones, etc. And then in part 3, which is a soon-to-be released portion, is how to forecast individual stocks. Now, if you're interested in joining, you can. The current price is $997, and it's set what I believe to be a very fairly price based on what I used to pay attending other seminars, what I believe that this sort of education can provide you in the future. So just so you know, we're capping it at 150 people globally. Once 150 people join up, I do take this course off the market, so it's no longer available. Now, what we are going to be doing is forecasting the Commonwealth Bank of Australia using financial astrology. And we want to know when the market is likely to be bullish or bearish for a particular month. And to do that, we use what is known as natal transits. Now, natal transits just means that we find the natal position of the planets where the stock was actually incorporated or first traded. And then we look at what transits are occurring to that planet over a specific month or period of time. For example, it could be 12 months. You want to get our 12-month forecast for the year ahead. We want to know what particular months are going to be likely bullish or bearish bias. And we use what's called transits to the natal chart. Transits to the natal chart means that when the specific planets or several planets move around the zodiac, they're making transits. In this case, these blue lines that pop up, they're making transits to the stationary planets on the zodiac, which are what is known as the natal. Natal just means like your birth chart. For example, when someone says, what's your zodiac sign, what's your star sign, you say, well, I'm an Aries, I'm a Pisces, I'm a Capricorn, etc. Well, in this instance, the natal sign for a particular company, in this instance right here, would be Cancer. His sun sign would be Cancer. And as the world moves around and as the planets move around the zodiac, it's making all these transits to the natal positions on the zodiac. Okay. Now, a lot of astrologers focus only on the sun. That's what you read in the newspapers and stuff like that. And that gives you like astrology from a personal perspective, and how the studies had concluded would develop a certain person's personality or things like that. I don't want to go in deep to it because I'm trying to keep this very specific, but I'm just trying to give you an overview, okay? Now, as the sun or any other planet moves around, let me add on more planets here. As they move around the zodiac, they're going to continually make I don't want entering. They're going to continually make transits to a particular planet on the natal chart. Remember, the natal one is on the inside, okay? So they're making transits all the time. Now, what we want to know is what kind of transits are made within a specific month. And then those transits are going to give us a bullish or bearish bias for that month or months into the future. Now, there is software which we can calculate all this. And in this instance, I've calculated all this from 1993 out to 2026, and we want to basically get an understanding of if a month is likely to be bullish or bearish. So I've just done an example of this, and all we do, I'm going to show you how the spreadsheet would work. All we would do is we would take our transits for a particular period of time, for example 30th 11th 2020, we would copy those transits into the tool that I provide you. Okay, I'm gonna have to blur some of this out because this is going to be for the back-end students. We would paste in those transits, and I can give you these transits, so it's not a problem. We copy them to our actual tool. Okay, we paste them in, and then these transits give us points. And then there's a net overall value. And that net overall value gives us a buy or sell bias for that particular month, okay? Now, like I said, I'm going to have to blur some of this out so that we just keep this for the back-end students. But that's basically how it works. So when we go in and we look at the actual market, we then get a sell or buy bias for that particular month. Now I've done several months here just as an example so that we can see if it was correct or incorrect. Now, no strategy is 100% correct 100% of the time. For example, you might have a pattern. You might be doing a pattern analysis or something like that. And let's just say we draw a trend line like this and a trend line like that, or even the other way around. We have like the market moving within this. And then we see that the market's going up, down, up, down, up, down. It pulls up, touches it, pulls up, and then breaks down, you know? So not every single pattern is going to be correct 100% of the time. That's what I'm trying to get at. Same with financial astrology. It's going to give us a bias for the month ahead, but there are other factors which can influence this, such as transits to the natal index, for example, instead of just a natal chart. Could be economic issues that are going on at a specific period of time, which is influencing people's buying and sell behavior. So we're trying to find accuracies around 75%, which I believe are suitable for investing in. Now let's just take a look at some disclaimers, because as we know, nothing is 100% correct 100% of the time. You are going to lose money. This is fake. This is fraud. You shouldn't buy this course. You shouldn't learn this strategy because it's just wrong, okay? All right, so there's the disclaimer. So when we look out and we get our net aspect value, and I'll put them on here. So for example, we had a sell bias, buy bias, no bias, buy bias, etc. I've marked in red the times that it was wrong, and I've marked in green the times that it was right. And this one should be technically black, because black just means that there was no, it wasn't wrong or right. For example, the no bias, we had no bias for that month, so it was not wrong or right. Generally, the market moves in three ways, right? We have buy bias, we have sell bias, then we have no bias, which just generally means that the market can just go sideways for that month. Now, when I calculate this and I backtest it, and I go deeper into the course on the nitty-gritty stuff, we're looking for where the market opens and we're looking for where the market closes. And if it is a sell bias, in this instance we have a sell bias, if the market is above at the end of the month on the close, then where it began and it was a sell bias, that would be incorrect. Okay, that would be a big X. If it is below on a sell bias where it opened, then that would be correct. It can be below by 1 cent, or it can be below, by $100. It doesn't really matter. But we have a leeway of error, and that leeway, I believe, fairly is about 2%. Okay, so in this instance, with a $62 stock, it might be like another $1, $1.50 or so, being 2%. So we sort of give it some leeway that if it's within a certain range, depending on the market action at the time, that we would consider it valid or invalid based on that. Now, no doubt, I'll go into the specifics, but you really have to learn this strategy intimately by backtesting, and getting a gauge on the market behavior at the time. I go into several examples, and you'll know, if you have a downtrend line and the market is, sort of moving on that downtrend line, pushing above, going down, do you buy that exact moment that it breaks above before it pushes down again? Or do you have other rules that you are applying? This is all part of how to build your bias on if a trend line break is going to be sustained or not. The same thing with these financial astrology theories. There are more nitty-gritty things, and I think that's why a lot of people find it hard to use them, because nobody teaches really this sort of stuff. So I'm just going to go through these examples, then I'll cut off this video. This is an example for those who are interested in the word of stuff but don't really understand it, or don't believe it works, or just are too busy doing other stuff. The McWhirter theory and these financial forecasting theories can give us a bias for the month ahead. It doesn't mean that the bias is going to be correct. Basically, as I said, if it's above at the end of the month or below the end of the month, depending on the bias, it's either valid or invalid. We use the bias not as a trade signal, but as a way to gauge if we should be bullish or bearish for that particular month, and looking for long signals or short signals, okay? It's not to be, okay, it's a bear bias, so we're going to short the market. We use this in combination with technical analysis, not individually, okay? So we had 2 sell biases in a row, which were invalid, okay? So the market was strongly moving higher. We then had a buy bias. Again, we just look at where the market opens and closes. So it opens down here, closes here. Technically correct in that instance, so it was a buy bias. Okay, yes, the market did fall lower by the end of the month. However, it was a buy bias, so starting to ending in the month. Then we move on to the next one. We had a buy bias. We had no bias in this instance, which means, generally speaking, the market should move sideways. In this instance, the market moved up, then down, then up. Didn't move down for long. It just pushed higher again. So the end of the month, basically from the 19th onwards, and this 19th onwards is going to be a recurring theme, actually. I'll show you that on this particular data set. From around the 19th to the 20th onwards, this market pushed higher. So it basically ignored that bias and pushed higher. And then we had a buy bias in place right here. The market started up here, came down to the beginning of the month before pushing higher, breaking the top, and it broke the top on the 20th. Before that, buy bias was invalidated. Again, we sort of had this sideways movement until around the 20th, okay? And then that was invalidated. So then the buy bias was actually incorrect. And then we had a sell bias, and again, I'm just going to reiterate why back testing is important, because then you can understand the nitty-gritty stuff. We had a sell bias was in place, boom, 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 it was really strong. The market then moved into basically a sideways motion over this time. But then our 20th date popped in again. We've had now 3 reoccurrences here where the 20th of the month has made our bias invalid. Again, going into the timing stuff, we want to know when the bias is likely to be invalidated. In this instance, I marked it off as incorrect. The sell bias was incorrect because the market did close above where it started, but it was the 20th again that pushed the market out of that sell bias. And then we had a buy bias where the market was just strong up, so you'd be looking for buy signals. This instance here, we had our opening here, our closing here. I believe it was within around the 2% mark, so I just marked it off as correct. You could mark it off as incorrect, it's up to you. I gave it a black 1. So it's not really wrong or right. It's within a leeway of error. So the market pushed, so it started here, pushed higher, then pushed lower, then tried to regain the losses essentially. Again, comes down to the interpretation. We had another buy signal in here where the market was bullish bias. We had the 19th, which basically invalidated that, pushing the market lower. Again, if we look at our buy bias, in this instance, again, we go down to the timing element again. This is the 20th. I just want you to remember that the 20th has been a major breaker of these biases at this particular time. Then we had a sell bias, which was incorrect. So in this instance, we would have been looking for short signals, potentially through this month. However, the market made a low on the 8th and basically pushed higher from there on out. Then we had a buy bias. So the market started down here and ended up here. So we would have been looking for those long possibilities. Then we had a sell bias. So the market started up here. It actually ended here. It actually ended below the open. So technically it's correct. The market moved down into the 12th, which I believe was very similar to the vibration that occurred up here. So we had basically a timing element there. Before the market reversed, pushed higher into the end, still validating our sell bias. However, it wasn't a strong sell. Then we had another sell bias again. So the market started up here and pushed lower into the end of the month. So we would have been fair looking for sell biases. Then we had buy bias. So the market started down here, pushed lower for a couple of days before pushing higher. Some events occurred, but the market did end up finishing higher than where it began. Okay, then we had another buy bias. In this instance, so starting here, market's pushing higher. And then we had another buy bias, and that's where I basically cut off the research for this particular period because I didn't want to go on and on and on. So there are some times that we're going to get it wrong. We have to learn how to interpret the time periods, which I've shown you basically an example of how we would interpret time periods. For example, around the 20th, I keep saying for example a lot because these time periods can change, but when you research time, which is a deep study, you got to build these time periods or these blocks of time periods where things can go wrong, and you got to be open to those situations where things can go wrong. And if it doesn't go wrong around that time period, then it's likely that the bias will keep pushing out. So yeah, that's an introduction to Module 3. I'll go ahead and anyone who joins up will get access to the programs that we're running for that, all the calculations, all the videos on how we built the program, so that you know how it works intimately. And then you can go ahead and back test this yourself. Now remember, you need to be getting your data source correct. So whether you have a paid program or free program for that, you got to get your data source correct so that you can actually go ahead and build your biases. And then you can just do that indefinitely into the end. Now, I try to maintain an accuracy of around 75%. I think if you have an accuracy, or if a pair you're trading has an accuracy of around 75%, it's pretty good strike rate on building a bias for that particular month. You know, there's a 75% chance that this bias is going to be correct, so you could either look long or look short on that bias. However, margin of error, you got to realize that sometimes in groups, this strategy is not going to work. And there could be other factors playing out, like longer term cycles playing out, not just, so this is a monthly bias, okay, but there could be a longer term cycle that is pushing a market bullish one direction or bearish another direction into the end of its cycle, okay? So the cycles are within cycles, and all we're doing here is building a monthly bias based on one strategy, okay? So one overall theme, one strategy, and that's the monthly bias. We do have our quarterly bias, and we also have our lunar bias, which is under part 2, which is how to forecast the New York Stock Exchange based on the lunar cycle. How to forecast individual stocks, we give you 2 biases, which is a monthly bias and a quarterly bias, and I teach you how to do them. And then we look at the third one, which is personal investing and astrology, and that's basically going to show you how to gauge if a specific investment or a asset class is worth your time or not. Because GANN often said that he was a major fan of Mexican Pete, and he would say if you study your relationship with a stock, for example, if you're buying it 10 times and you win 9 out of 10 times, you have a good relationship with that stock. Or if you're buying a stock 10 times and you keep losing, you've lost 7 out of 10 times, then you have a negative relationship with that stock. Now, GANN didn't actually give us the rules on how to do this. However, financial astrology provided us that gap that GANN didn't publicly write about what he was referring to. And I'll go ahead and teach you that in the bonus section. So if you want to know if you have a natural affinity with the stock, then I'll give you the tools for that. So you can quickly jot in your natal information, the stock's natal information. You can quickly gauge if you should be bothering to waste your time on that specific market or not. This course is going to keep growing. Things are going to get better. I'm going to find nuances in the software, and we're going to keep optimizing the software for further accuracy. If you're interested, you're more than welcome to join. I'm more than happy to keep talking about it and giving you examples of how it works. However, it's a very long study, so please only come into this if you're really dedicated to the study, because so far there's over 15 hours of content, and a lot of people don't have time to sit down for 15 hours and watch it. But I think that doing so is going to greatly benefit you, and that's why I've decided to put this together for you. That's all I have. Talk to you soon.